You're listening to Dairy Voice by Dairy Business News, a podcast exclusively for the dairy industry.
One of our sponsors of the Dairy Voice podcast is National DHIA. NDHIA ensures information accuracy and represents their members' interests. They are the direct voice for the dairy information industry. To find out more, go to dhia.org.
This episode is brought to you by DRMS, a trusted provider of dairy information and decision tools. As a nonprofit with deep ties to NC State and Iowa State universities, we've spent over 65 years serving the dairy industry, delivering research-backed software, standardized data, and exceptional customer support. Our dedicated team works alongside producers and consultants to ensure they get the training, tools, and insights they need. We turn complex herd data into clear, actionable insights that help producers and consultants make informed decisions every day through solutions built in collaboration with the dairy industry. Learn more at drms.org.
Hi, everybody. I'm Mike Opperman, and I'll be your host for Dairy Voice, a podcast produced by Dairy Business News. Today, we're going to talk about the dairy economy and what we're looking forward to into 2026. The one constant in the dairy industry, whether you're a producer or you work for a dairy business, is change. Over the past several decades, we've seen significant consolidation, not only the number of dairy farms, but also in the number of companies who are serving those producers. Rabobank recently published the Global Dairy Top 20 report, and here to talk about some of the findings in that report is Lucas Fuess, Senior Dairy Analyst with Rabobank. Welcome, Lucas.
Thank you very much for having me. It's a joy to be on today.
Great. Well, just to kind of level set, Lucas, I know you were an author of the Top 20 report. Can you just kind of tell us about what the report is, what it analyzes, and what some of the information it provides?
So I work for Rabobank, or sometimes to dairy farmers known as Rabo AgriFinance. And I am not a banker, though. I work on our research team. So I am a commodity analyst on a team of about 20 here in North America, where essentially any sector within food and agriculture that we bank, we have analysts to back up that industry with knowledge and research and support from the bank internally. I focus specifically on dairy. I've been in dairy my entire life. Now I live in Chicago, Illinois, working out of the Rabobank office here, but I grew up on a dairy farm in upstate New York where my family does still farm. So, specifically to your question, my job is to constantly analyze the industry, look at not only short-term things like price forecasts and what's going on in the near term, but also broader trends within the global industry as well. And we produce a variety of reports per year on hot topics, strategic outlook, anything that we think would be impactful to the entire value chain. So not only dairy farmers, but processors, co-ops, even end users. This top 20 report is one of our more famous Rabo research reports on an annual basis. Essentially, we look at the revenue of all of the largest global dairy companies and rank them based on their revenue, look at merger and acquisition activity, look at divestment activity, and we come up with a top 20 list of those largest global dairy companies in the world, and then provide a little bit of analysis and insight on things that we see that are exciting, are new, are different on a year-to-year basis. It actually has developed into its own Wikipedia page, so it gets quite a bit of attention from the industry, but at the end of the day, it's a highly anticipated list of those largest dairy companies. And I think especially interesting, not only in their activity, is just for farmers to see, especially from the US perspective, how global this industry is and the big movers and shakers on a year-to-year basis. So it's a pretty exciting project that we do every year and one of our largest and most anticipated reports.
With over 85 projects, California Bioenergy is without a doubt one of the leading developers of anaerobic digesters for dairy farms in the United States. Since 2006, CalBio has been forming successful partnerships with dairy farmers to create digesters that are built to last. Our CalBio team has the expertise to help lead you through the entire development process. From project design and engineering to credit generation and the day-to-day operations. With subsidiaries in the Northwest, Midwest, and Southwest, CalBio is ready to partner with dairy farmers across the country. Learn more at calbioenergy.com.
Last year, the report showed that the combined turnover rate of the top 20 increased by 0.6%. And it's not a big number, but it is definitely significant. And this year, you're looking at another 0.5% growth in turnover. What do you see as kind of the leading cause for that?
A lot of the drivers of that increased revenue is just natural or even sometimes acquired growth for a lot of these companies, coupled with changes in commodity values or more specifically, the milk price. I do think it's important. I know that percentage does sound small, but it's a small percentage on a very big number. So we're looking at on just these top 20 companies, revenue numbers in excess of $250 billion. So a small percentage point could mean almost $1 billion worth of change per year. I think some companies are much more exposed to the milk price. Companies like Dairy Farmers of America, DFA, their revenue will go up and down based on the milk price because they are so exposed to their thousands of farmer members coupled with the products that they sell. Other companies are much more acquisition heavy. Companies like Lactalis, which is our number one ranked company based in France and has been number one for a few years now, has been on quite an acquisition surge over the past several years, essentially being able to purchase other companies, and then in turn, that revenue from new companies is added to their revenue, of course. So it comes from a variety of different drivers based on the makeup of that specific company. But I also think it speaks to overall dairy demand and what we're seeing not only domestically here in the US, but also on a global basis. In the US, we see milk production in a typical year expand. We were coming off of a few year period where milk output was pretty flat on a year over year basis, but certainly now into 2025, we are expanding very quickly. That is happening in some other global areas as well, but I think when you look at the overall world, that milk production is growing to match growing global demand for dairy, which is a really good story and a good piece of news for probably all of our listeners today. So I think that growth in milk production, that growth in dairy demand, consumers turning to these products also contributes to those revenue increases. If we look ahead into the future, we are forecasting consistent revenue gains in the future years when we do this report. So it's something that's been happening on a fairly consistent basis over the past several years, and something that we do anticipate will continue into the future based on our anticipated growth in these companies.
So as these companies grow and as they, like you said with Lactalis, purchase other companies, what is some kind of the leading cause of these future mergers and acquisitions activity, and how does that impact a U.S. dairy operation?
That's a good question. We're coming off of a few year period of more limited M&A activity, merger and acquisition activity. But looking ahead, we do anticipate that to pick up. It's certainly happened into 2025 with more anticipated changes into 2026. I think in the immediate post-COVID years, coupled with economic uncertainty and also the inflationary economies that were not only present here in the US, but also around the world, there is a lot of hesitance from some of these companies to participate in in those sort of big moves, companies being a little bit more cautious, a little bit more hesitant, waiting to see how things played out in a post-COVID world. But now we are kind of more ripe for some of these changes. Recently, actually, as we were taking this report to publishing, and it had been announced a while ago, but Fonterra, for example, the largest dairy company in New Zealand with more than 3/4 of market share in milk production in the country, had announced a pretty major divestment of a lot of their consumer brands and also some of their operations in some of the countries around the world outside of New Zealand. That's a really significant one that allows that company to focus solely on their kind of New Zealand operations and the wholesale products that have made them famous as a company. So they're an example of one that's kind of returning to their core business. Others that I mentioned, Lactalis has purchased a variety of companies globally to add to their operations. Significantly this year, just in June, we saw that Lactalis acquired the US yogurt business of General Mills, which General Mills had spun off. That's an interesting one, I think, where General Mills looked at their entire portfolio, again, a huge consumer goods company, and saw that some brands were growing at a quicker pace than others and decided that yogurt wasn't something that they were going to focus on in the future, something that maybe they thought a company that was more core to dairy could focus on better than them. So they were able to spin it off. Lactalis a few years ago purchased some of the cheese brands from Kraft Heinz and has developed those into their own business. And then I think the other point too is in Europe, especially what we are seeing is European milk production is not necessarily forecasted to grow in the future like it is in the US or like it is in some other parts of the world. So Europe is kind of at a crossroads where a variety of cooperatives across the continent are looking at stagnating or even declining milk production and trying to strategize and anticipate how they can continue to grow their brands, grow their revenue, grow their business in the future. Again, that growth that is overall good for dairy farmers. It's what, if they are publicly traded, what their investors want. And a lot of times M&A activity allows them to add more farmers to their base, continue to grow their brands in a declining milk production environment. So I guess going back specifically to your question, what does it mean for the United States? Over the past several years, we've seen investments by some foreign dairy companies into the US. Generally, those also are companies looking to grow and strategizing by seeing the US as a growing milk pool, a growing milk shed, an economy that is generally friendly to dairy. So I think that looking ahead, in the near term, we definitely anticipate an increase in some of this activity, with the results kind of mixed, but I think generally positive for most of these companies, most of the farmers involved. It's just a really interesting kind of economic kind of situation that we are in right now to watch some of this activity play out.
You mentioned that obviously the dairy business is a global business and typically been pretty volatile depending on what part of the world you're in, what sort of political climate there is, and so forth. You mentioned Europe having a potential reduction in dairy production on the farm. We talk about New Zealand and their penchant for exports and so forth. Is there an area of the country that, I mean, area of the world that you feel like there's more of this mergers and acquisitions going on, or companies that are growing faster? Is that the entirety of the globe, or are there specific pockets where that's happening?
Overall, there's a two-part answer to that. If I start with the US, I had mentioned the General Mills divestment of their Yoplait business. That's something that a Yoplait yogurt, for example, is something that nearly every American consumer would be very familiar with. So that is something that's kind of playing out on a brand level and more from a consumer perspective. We also are watching it play out in something like a Unilever divesting their ice cream business. Again, similar to General Mills looking at ice cream, Unilever specifically looking at ice cream and seeing it as a brand that is maybe showing less growth than some of their other products, wanting to streamline their operations. It's one of the only products Unilever makes that requires that frozen shipment and logistics, which is also an additional cost. So, from an American perspective, I think it shows up more on a brand level rather than a entire company level. The other part or the other answer to your question goes back to Europe. So, and again, it's those milk cooperatives that are dealing with a shift in European milk production, the outlook for the farm and rural economy in Europe. Some examples there, things that we're seeing right now are the Friesland Campina, the huge Dutch cooperative, their merger with Milko-Bell, which is a smaller cooperative, and then also Arla Foods with significant presence in a variety of countries around Europe, but primarily based in Denmark. Their merger with a German cooperative called DMK, a little bit smaller, but represents Arla wanting to expand into Germany and continue to show growth in Germany, which is one of Europe's top milk producing countries. So yeah, again, I think the US maybe just kind of plays out on a brand level, maybe more apparent to the consumer side of things, not something that dairy farmers are necessarily seeing with their specific milk cooperatives or whoever picks up their milk. They're not necessarily seeing that change in the US, whereas dairy farmers in Europe are seeing that at a much more advanced rate.
Most of the globe, except for a significant part, which is Southeast Asia and China. I know that China has, tried to build up their domestic production and so forth. They're still a huge importer, but we haven't heard much from that part of the world.
China is a very interesting one. To your point, still the world's #1 dairy importer, still has a significant role in the ups and downs of global dairy trade, still a critical factor when we look at where is demand coming from. It is in large part China, in addition to a lot of other countries now, though, which are also increasing their imports. I think we can go back to around 2017, 2018 period. So not quite a decade ago, but the vision was probably in process around a decade ago. The Chinese government decided that they wanted to increase milk production within China to procure more of their dairy domestically. And we saw Chinese milk production start to grow at a very quick pace back in 2018. Essentially, every year up until 2024, we saw a very quick pace in that growth in Chinese milk production. We estimate at Rabo Research that China has probably grown their self-sufficiency in dairy from around 75% to almost 85%. So essentially what they need from all of their dairy products, they can produce more than 3/4 of it internally. But when you consider 1 billion plus people in the country, that still requires some amount of imports, even if it's not as much as it used to be. Chinese imports did peak back in 2021 and have seen mixed performance in the year since, but generally have declined a little bit since that peak year back 4 years ago now. When we think about the companies in China, there are two leaders there that do control a big part of the Chinese milk shed. One is called Yili and one is called Mengyu. Both of them have seen pretty consistent growth in revenues over the past several years, of course, consistent with the increased milk production within China. This year, because of the relationship with the Chinese renminbi, the Chinese yuan versus the US dollar. There's a little bit of a struggle for some of their revenues to match prior year levels. We saw a little bit of a shift in ranking. But yeah, to your point, I think the Chinese growth has been quite incredible. And I say up until 2024 because over the past year or so, we have seen the Chinese farm gate milk price decline quite sharply. And farm economics, farm profitability has been a little bit more of a struggle over the past year. So we've actually seen the first decrease in Chinese milk production since around 1 year ago that we have in many, many years, just because of the struggles of some of those small to medium farms to profit. And just like we would see here in the US, right? Low milk prices versus high costs. We will see some farms go out, unfortunately. I think the key message there is China has grown their milk production. We have seen imports decline slightly, but they are still a huge player on the global market and will remain so for many years into the future.
Yeah, just the massive demand opportunities that are there from, like you said, the huge population still makes it an importer of a lot of dairy product. When you looked at the report and as you were building the list, were there any surprises from top contenders or companies that were moving in or out of leadership positions?
I think this year it was almost the opposite, where there was very little change from 2024 to 2025. The names of the companies were all the exact same from a year over year basis, no new entrants this year. And then from a ranking perspective, we did see some slight shifts, but all of those shifts were essentially trading places with companies that were in the prior year right next to them. So this year it was just very subtle shift, very small changes in the rankings. But importantly, next year we will see much more significant shifts. The Fonterra divestment of multi-billions of dollars of their revenue will be finalized, leading Fonterra to decline. The Unilever divestment of their ice cream business will likely be finalized, leading Unilever to decline. It is, I believe, likely that a lot of those ice cream businesses will be spun off into their own brand, which might be large enough for them to enter into the top 20 list. DMK, the German cooperative, which I mentioned earlier, that is merging with Arla, their revenue will be folded into Arla's revenue, pushing Arla probably a little bit higher, and of course, eliminating DMK from the list. So, to your question, this year, very subtle shifts, but next year, based on all of these changes and all of this activity that we're seeing, we do expect quite a radical change in some of these rankings with companies moving off, new companies moving on, and next year I anticipate quite an exciting report when we publish it.
So as we look into 2026, what are you focusing on as what could be the levers that trigger some of that shakeup?
Right now, the M&A activity, of course, it will be one of the key levers there with companies changing hands. We do have a watch list of new companies that might jump onto the list. We're watching Emmy, for example, out of France, very closely, and a few others that have revenues close. A few years ago, Glanbia out of Ireland with significant operations in the US dropped off of the list. Also, Japan does not have any companies on the list right now. So there's a few that we're watching there. But more broadly to your question, I think right now we are seeing pretty significant growth in milk production from nearly all regions of the world, with the exception of China, which I had mentioned earlier. And that has caused some bearish market sentiment to enter into our view. We've seen recently this month, as we talk at the end of September, we've seen some pretty significant weakness enter US markets, especially in things like butter and cheese. And even globally, US prices were already well below those of our competition in the EU and New Zealand, for example, but we are seeing some price downside in Europe and New Zealand. So depending on how significant this milk production growth materializes to be throughout the rest of this year and into 2026, and how significant some of this price weakness that we are anticipating, we could see some revenue shifts there as well, driven by those declining milk prices, which could also cause some shifts in our top 20 rankings. So lots of things going on. Certainly, everyone in the dairy world is no stranger to a lot of things going on and no stranger to price volatility. But right now, yeah, as we look ahead to 2026, it will come down to the M&A activity that's finalized, coupled with where milk prices settle out here over the next several months.
So you said you were a market analyst, and we're getting down to the end of our podcast, but I can't let you go without asking you a market question. So you just mentioned looking at milk prices going into 2026. As I drive around the country, I see a whole lot of corn in the fields. It feels like we have a bumper crop of corn as we get deeper into harvest. How is that going to affect margins going into the next 6 months? And what's your crystal ball look like for milk prices?
2025 has been a welcomed year of lower feed costs, thankfully due to last year's harvest and lower prices for both corn and soybeans. This year is no different. If we look at futures markets for corn, soybeans, or even current prices for alfalfa in nearly the entirety of the country, we are anticipating feed costs for dairy farmers to stay low throughout 2026. So that is the good news. Lower cost structure there, probably taking a few dollars per hundredweight off of that cost of production versus some of our recent high feed cost years. The challenging part is a lower milk price outlook into the rest of this year and possibly into 2026, driven by the very strong milk supply that we have right now. So I think that regardless of lower feed costs, those lower milk prices will start to drive margins and profitability more towards a neutral outlook, or perhaps even a slightly negative outlook on the profitability side of things. All of that said, though, I still think that the state of dairy is quite healthy, regardless of where margins look like in the near term. If we go back a year ago, we saw very, very strong profits to end 2024. I think very welcomed from farmers after a difficult 2023. Those profits continued throughout essentially the first half of this year, the first half of 2025. So dairy farmers are coming off of a solid year of decent profitability, which sets them up well to weather a little bit of a downturn here moving forward. And then the other component too that we need to consider is the almost insane or unbelievable price of cows moving into beef. So beef on dairy cross calves, especially, I've heard numbers as much as $1,400, $1,500 for beef on dairy cross calves. That is very significant revenue from non-milk sources that dairy farmers have essentially never had before. If we look at cost of production data, it's possible that as much as 10% of farmer revenue this year could come from calf and cow sales, which is almost astounding when we think that in some years those calves were worth almost nothing. I mean, I remember growing up, my dad would say he would send a calf to the auction barn and then get a bill because the hauling cost was more than the value of that calf. So when we have stories and memories of that, coupled with a single calf that can bring $1,500 in revenue, that is a very significant game changer that essentially causes dairy farmers to change or at least critically think about their entire breeding strategy, how many cows they want to keep in the barn, which animals they're breeding to dairy, how much they can breed to beef and still get away with maintaining their dairy herd. So there's a little bit more of a strategy that comes into play here when we think of profitability versus the simple milk over feed cost question. Yeah, at the bottom line, I do think when we see milk production expand right now at numbers like 3 to 4% higher versus the prior year, that is very significant growth. That is, of course, bringing dairy product prices lower and subsequently farm or milk prices lower. But I think I'm not overly concerned right now just because of those lower feed costs and some of those additional revenue opportunities. So I'd like to say I'm still quite optimistic for U.S. dairy economy moving into 2026.
Yeah, everybody is waiting for the beef supply to catch up with demand, but it doesn't seem like it's getting there.
And I
Prices are
don't
still high.
Yeah, I don't think
Crazy.
I don't think it will for probably at least a few years.
Yeah.
At Rabo Research, we do see the beef herd size bottoming out here in 2025 and beginning to grow, but that growth is very small, very marginal, not anything that will make a significant difference in those prices in the near term. We just need time. I mean, there's no quick solution. We can't Of course, we can't just stop a cow from milking when we don't need the milk, just like you can't make a beef cow materialize when you need it. So at this point, it's going to take some time for any of that to change.
Yeah, we're not pork or chickens. We can't do that quick.
Exactly.
Yeah. It's been terrific talking to you. Thanks for your time today.
Thanks very much for having me. Appreciate the opportunity to come on today.
This has been Mike Opperman for Dairy Voice from Dairy Business News.